But we're going to go ahead and get started a little bit. If you have feedback in terms of kind of the way things work today and kind of the format of things and that kind of stuff, let me know. The first thing I actually want to do, hey, Saki, good to see you. The first thing I have to do just to keep the lawyers happy is we have to read a little bit of a legal disclaimer. So let me go ahead and turn on screen sharing, and we'll do that. And the first thing I actually want to ask your opinion, because we were talking about it, Greg and I were talking about this. Oops, I hit the stop sharing button. So Greg and I were talking about this morning. I'm like, well, maybe we should call it Trader Talk, T-O-K. Maybe that'll. So do you guys like that? Or should we spell it the adult way? Let us know. What do you think, Anne-Marie?
I don't really have an opinion here.
Okay. All right, cool. All right, let me read the legal disclaimer. We'll get started.
We could call it Ticker Talk since you've got that ticker in the
background. Ooh. Oh, I like that. You might have just named the whole event. Actually.
Your picture did it.
Okay, anyway. Okay. Today's demonstration is designed to instruct you on using MetaStock, the company software plugins. It is not a recommendation to buy or sell or other guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading securities. MetaStock Traders Forum and their employees disclaim all liability for any investment decisions by investors based on the use of the software, any trading strategies, or any information provided in connection with these companies. MetaStock Traders Forum LLC and their employees do not endorse the purchase of a security. We're not paid for the promotion of a security. No information contained in this presentation should be construed as investment advice or the solicitation to buy a security. So there you go. Let me go ahead and stop sharing that. Anne-Marie, are you still here?
I am.
Oh, your picture went blank. Your camera turned off.
I don't know why. Let me see what happened. Camera. No, it shows. My camera is active. I'm not sure.
Huh, that's weird that it was
why it's not showing.
All right. Interesting.
That's bizarre.
Yeah, when you turn it off, you get like the little
little picture.
Yeah, the picture, yeah, for sure. But when you're not looking at it, we don't. Yeah.
So weird.
And it was weird that it was just working too.
I know.
Let's see. Is there anything I can do on this end? I can mute you. And that's all. All right. So let's put up a chart maybe, and then we'll just kind of talk a little bit and we'll see how everything goes. If you guys have questions in chat or suggestions for the name, Maverick says we should do it the adult way.
Well, unless we change it to Ticker Talk and then it's like TikTok. And so it might be a little bit more clever, but I get it.
Maverick wants me to keep an eye on chat because I told you about the little snafu we had right as we get started. It took me 22 minutes to realize that people were joining with live microphones. So, in any case, I want to kind of just talk a little bit. I want to introduce you a little bit. We can look at RCL here. It's just the chart that happens to be open. And then that way, you're just not staring at just me. Let me go ahead and do that. So here, let's share this screen. Anne-Marie's been a good partner of MetaStock. Gosh, it goes back a while, right?
Yeah.
You have what is probably the second or third most popular video on our YouTube channel completely. And it's a video that talks about your favorite indicator. So, but before we kind of talk about kind of like the indicators and stuff that you like to use, I just want to kind of talk about how I know Anne-Marie and just kind of give an introduction to her. So with Anne-Marie, one of the things that always impresses me is we'll do a lot of sessions where we kind of just are talking about charts. You know, those are my favorite types of chart sessions that we do together. But to me, what impresses me most about you, Anne-Marie, is just kind of the level of knowledge that you have. That it seems like people can pull up a ticker of something that I've never heard of before, and you just know it. So that's how I'm going to introduce you today.
Thank you.
I just think you're great. But what I also want to say is, like, as we get started, what's the best way people can find you if they want to follow you up on the internet?
You know, you can find me on X. That's the easiest way to find me. And that's
your picture's back.
I know. I wanted to see if the camera had been hijacked. And
Yeah,
it
okay.
was. And so
Okay.
I forced it to shut down and open back up.
So X, if in case you don't know, is formerly known as Twitter. I
Yeah.
love it how everybody still says X, formerly Twitter. Okay. And what's your handle there?
Anne Marie Trades.
Okay, cool. All
I have a
right.
lot of imposters. So make sure that if you follow me, if you get a DM that asks you for money or to join a service, that's not me. Just letting you know.
Yeah, so it's I'm gonna type it here in the chat, and then when we do the video, we'll actually put it in as a pop-up somewhere here. Maybe.
Perfect.
Let's see, Anne Marie Trait.
Mm-hmm.
Did I get that right?
Yep.
Okay, cool. All right, Maverick, I'm watching the chat for you. It looks like everything's going okay. Let me talk to you a little bit about your origin story. Like, how did you kind of get involved in trading initially?
You know, um, I hear stories that say that most people have about 3 careers that they go through.
Mm-hmm.
Not as fortunate as someone like you that really has been in the same place and just really found your home like you did with MetaStock and Reuters. And so for me, I started as a statistician and then I became a neuroscience researcher, but it didn't
Okay.
pay very well.
Uh-huh.
So then I became a recruiter that recruited science people.
Mm-hmm.
And then I opened up a recruiting business and I did that for many years until I was just totally burned out. And I was taking my staff to a success magazine. Um, they bring those folks in and they have one guy from here and one guy from here. I can make money in real estate, whatever, whatever. They were way into it. And I said, all right, I'll go with you. And I watched somebody talk about the stock market and I went, that looks so easy. I want to do it.
Yeah. Was it as
One,
easy
it's
as you
not easy.
anticipated? Okay. Okay.
Yeah,
Yeah,
no.
yeah, yeah.
Hardest
That's
work you'll ever do.
that's interesting. For me personally, I had just kind of I had actually my life path. I was going to be a pharmacist, and I actually joined the army, and they taught me how to count pills, and I kind of really had some experience doing that. They went. I was a reservist, so I never really did active duty, but I went and learned how to count pills for the government for 8 months, and I just I kind of was back. I didn't know if I wanted to do that forever. And a buddy of mine called and said, "Hey, I'm working for this company, MetaStock." And so I came in brand new to the market. I knew what a stock was, and that's about it. So from there, it kind of ballooned up. So, do you remember the first stock you ever bought?
I do not, but I remember the worst trade I ever had.
Oh, tell us it. Yeah, let's talk about that.
So it was Intuitive Surgical,
Okay.
and they had gone through a series of incredible upward growth. For folks that don't know, Intuitive Surgical makes the Da Vinci machine. And so this is when they first came onto the scene. And I just thought it was incredible. And it had quarter after quarter after quarter of amazing earnings. Never went down. And I went very heavy, long options and stock into the earnings. And it gapped down $100 per share. Yeah, it was
Yeah.
the most debilitating trade I've ever had. I literally was a deer in the headlights going, what is happening? It's the fight, flight, freeze, or appease. And since I couldn't talk to anybody, there was no appeasing. And so I just froze. So yeah, it left me with some very, very good lessons about managing risk.
That's the yeah. Okay, so let's talk a little bit about that then. Like, what was the biggest lesson there? Was it to kind of use a stop loss, or was it position
You
sizing,
know,
or?
the stop loss would not have helped me because we gapped down $100.
Mm-hmm.
It was absolutely position sizing, but it was also a complete disregard for what might happen that I never even looked at on the landscape. And for a lot of us as traders, when we start thinking about, ooh, this is going to be great, we only think about how much we can make because we're so certain that our hypothesis is correct, that we don't do the thing that keeps us in the business for a long period of time. And that is managing risk. And so always when I get in a trade, I go, all right, if the wheels come off the bus here, what is the absolute worst that can happen to me? And am I prepared psychologically to manage that? Because I learned about my breaking point. My breaking point was if you lose $50,000 on a trade, actually it was probably closer to 100 grand by the time I was done.
Ouch.
Yeah, it was very painful. I had to do something different because I literally was completely incapable of making decisions. My brain went into a gridlock.
Yeah,
Yeah, it
you're
was
like, what do
bad.
I do? Yeah, yeah, yeah,
Exactly.
yeah. Well,
Yeah,
I remember my first trade.
you do.
Yeah, yeah,
Tell
yeah, yeah,
me.
yeah. Yeah. Okay, so
Was it good?
we were working at yeah, yeah, it's
Uh-huh.
kind of. So I was working for MetaStock at the time, and it was when Taser. You remember TASR?
Yes.
Yeah, yeah.
Yes.
My first trade was in Taser, and for months I had a customer that was telling me you need to buy Taser, and for months I was kind of looking at the chart, and for months it was just going up. And every time I talked to him on the phone, I talked to him rather frequently. He'd be like, "Hey, you haven't bought Taser yet?" And so I finally was like, "Okay, well I'll buy it, right?" And I bought it, straight green bar, straight up all day long. And I'm totally in the green. I'm like, wow, that was really cool. But I was like, I'm so much, I'm going to close this position out because I really don't know what I'm doing yet, right? So I had a nice little profit. The next little day, I was watching it again, and it had a doji. Just very, very indecisive bars, like is what I learned later on, right? And I was like, okay, cool. I didn't trade it that day. The very next day, I was like, that was kind of fun. This has been going up for months. What's the likelihood it's going to go down? And you know the end of the story.
Yeah.
I sold it at the end of the day, and so my best trade and my worst trade, and it
Are
was
in the
almost a
same
wash,
stock?
were
Oh
the
my
same
gosh.
stock. It
It's
was also my
amazing.
first trade and my second trade. So there you go. That's
That's
how.
pretty amazing.
That was a lot of
That's
fun.
that's going to be a unique story, I would imagine, if you talk to lots and lots and lots of traders.
Yeah, yeah. What do you, in terms of trading and strategies, like what do you think is like kind of if somebody's new to trading, what is advice you'd give them?
You know, the number one thing I would say is we get into a chart for one of two reasons: because we think we're going to make money, or because we want to have some sort of long-term holding that eventually will make money. And so this is why we think about going into the stock market anyway. My thought is always, nobody thinks about what happens if you're forced to sell. Many times we just go, you know what, I'm going to buy this. It's a long-term investment. And we think about it like that, so we don't think about risk. But at the end of the day, unless you're willing for that account to go to zero, there is going to come a pain point when you go, okay, something's got to change. I got to get out. And it's better to find out where that pain point is so that you can prepare ahead of time versus experience the pain point and not know what to do.
When you're looking at the market, do you look at in terms of stops? Do you use automatic stops, or do you kind of look at the market when you're in a position to
Yeah,
determine
every chart needs its own stop. You know, you can look at something like average true range or
Okay.
average daily range and sort of think about that. You can use an ATR that covers an average 14 days. But for me, just like what we're looking at in RCL, we can see that I have those brown lines there that sort of go, okay, if you buy it here, it doesn't need to go down under that level. And so what that really is doing is simply plotting the last area of near-term support. And so if I say, hey, listen, I want to get involved in RCL, and I look at the last place that it said to sell and then reversed, I know that's where the buyers came in and went, no, we don't want to do that. And so I have to think about that area at the 105 zone. So if I go in, is that 105 or 150? I can't
This one
tell.
right here would be 154.
Right. So let's say 155 sitting right there. And if I get involved here at, 162 or whatever it is that it's showing, that risk, I have to say immediately, wait a second, that's where you're going to have to say, I need to make a decision. And that decision is probably, if I don't bounce immediately, I need to get out. And so that will tell me what my size of the trade ought to be. Because sometimes, charts run wild. But if they don't and they come back to a support zone, there's always a great place to say, okay, this is my risk. It could bounce from here. But if it fades, I know there are no buyers that came back to say, I support you. It's going to go down into that next level, which is another 5 points below. And so that's how I will do it. Everything is, what's the most I'm going to allow myself to lose here?
Now I just kind of randomly pulled up RCL. Are there stocks that you'd like to look at? Are there some stocks that you have an eye on right now?
I try to fish in the ponds that have things that I'm looking for. So right now, software as a service. Of course, everybody goes, wow, tech heavy. How creative of you to pick that. Listen, we're here to invest to make money. And if we say, I'm not going there because it's a crowded trade, the market has a natural tendency to run up until it doesn't. And so why not just buy the higher lows on the way up? And so I've been sitting in software and software as a service for the last little bit. So today the Mag 7 is down, but all those places, software as a service, are getting some sort of lift. So I love cybersecurity. I've liked it for a long time. CrowdStrike, Palantir, Palo Alto Networks. There are a lot of them, right, that are just. And so we're looking at CrowdStrike today and we say, ooh, all right, we've got ourselves a sell zone. So what could it go to? You see the huge gap that came at earnings. It could go to the bottom of that gap, right? Exactly, right down there. And so my thought is, you know what? I'm going to put an alert. I don't know how long this is going to behave this way, but I'm going to put an alert right at that line. And if it comes into it, I'm going to go in with a little bit of a long. How I might take that long is either a short put spread. I might do a long call spread. I might do a call butterfly, all those kinds of things I could potentially do. And then I would take the trade. If it pops here at the top of the gap, I'm not sure how much it's going to give me because now it's underneath that black moving average that I have a tendency to keep there that tells me, you know, that's kind of the end of the road.
Okay, here's another question I have for you. And I thought about it, and I was like, I got a good question. And then I forgot it. But then I remembered it again. So one of the things I said earlier on is like, you know, I'm impressed about how much you know about the fundamentals of companies, the general dynamics of the market, generally what, you know, stuff that, you know, I think it, and I think it speaks to your statistician. How much of your actual decision making has to do from a sector down approach or a fundamental approach versus a technical approach? Like, can you describe?
Fabulous question. That's a fantastic question. Because here's the thing. If I am looking for bullish stocks and I end up looking in the Russell 2000 or the components of the IWM, I'm not going to be fishing in a pool of very healthy fish, right? So I'm going to look at those sectors and I'm going to say, all right, if you want a long, where is that long most likely to sit? So if I'm looking for strength to the upside, I'll go to the whole strength of the upside group and I'll go, let me see the ones that are the top 10, and I'm going to see the ones that are closest to their 20 simple moving average on the daily chart, or their 10 simple moving average on a daily chart. And that's going to give me limited downside risk and an opportunity to play in a pool where everybody is fishing and they're fishing for the best fish in the pond. If I'm looking for a short, I'll do the exact opposite. I'll go to the weakest sector and I'll pick the top worst performers, and I will look for the one that is closest to its downward moving average, and I will try to fish there. And that really is it. So I try to go where strength is. I don't try to be a maverick. I don't have enough trading capital to be a maverick in that case, simply because if I'm wrong, right? You remember when, shucks, what's his name? He owns Pershing Capital. He had that short on Herbalife that lost him $1 billion. Bill Ackman. There you go. I don't have $1 billion in an account. He went $1 billion in the hole before he pulled the string. And so for me, I'm thinking, wait, I don't have the ability to hang on. So I'm just going to go where the surf is the strongest, catch the wave, and when things start to falter, I'm out. And this really is a perfect example of why I'm not in CrowdStrike right now, because we noticed that it stopped making new highs in the middle of May. Right?
Yeah.
It just stopped moving higher. So the question is this: what market participants make things go higher? Well, it's buyers. Buyers make market participants go out. Sellers, yes, if they're leaving the market, but they have to buy to leave, right? And that's what forces price up in a squeeze. So if I look at this and I go, okay, well, there are no interested buyers there, I'm going to pull back and go, I need to wait. I need to wait until this chart comes in, has a really nasty couple of days, couple of weeks, and then watch for it to stabilize. And that's my favorite thing to do. I've become less eager to get in. I just wait for a terrible day. Like today, with this 2% drop in the NASDAQ, thereabouts, I'm bottom fishing in the winner pile, right? What's Amazon looking like? What's Microsoft looking like?
Let's
right?
take a look.
Those sorts of things. Yeah, absolutely.
Okay. Here
So
we go.
perfect.
Zoom
Look at
in a bit.
this. It's coming in right to its old support zone. So this is me. See the slope of that black line? It's sloping up. Amazon's doing great. I'm going to look at that and go, you know what? I'm going to nibble in a little bit of Amazon right here. How might I do it? A short put spread, a long call spread, something that limits my risk but allows me to enter. And then at the end of the day, if I come in tomorrow and it breaks down, if I have those options positioned correctly, I'm in great shape. If I don't have the options positioned correctly and the stock moves against me, theta will still carry me through. And if it continues to fade, I can get out, with nothing but a scratch, not a gaping wound to the chest. But this is a place where I would go, you know what? That's ideal for me to go. I'm going to add right here to this position.
Looks like Saki is raising his hand. But Saki, if you have a question, type it in, and we'll be happy to look at it. I'm going to have, this is a stock that is your fault I bought for the first time, and it's a forum favorite. We're going to go ahead and look at it.
Yeah, love it.
I don't know if you've heard of it before. It's cost.o. Or actually, yeah,
never heard of it.
Saki would let you know that with Costco that you can go to the food court and you can buy a hot dog for $1.50 and you can get a free drink with that and a refill. So
yeah, they announced that they are raising their price for the 2 tiers. They're raising the lower tier by $5 and raising.
When did they announce that?
Early. Yes, it might have been early this morning. Or it might have been yesterday afternoon.
That explains why. I guess the market didn't like that idea.
Yeah. So the tiers are, there's a lower tier and then there's, I think, a black card tier. I don't know.
The executive club, I think,
yeah,
is what it's
there
called.
you go. There you go.
I could check my wallet. Hold on.
Yeah, there you go. So your membership is going up by $10 a month. Okay. I think it went from 130 to 140 or something like that.
Okay.
And then the other one goes from 60 to 65. So what do we know about Costco, though? We know that they're mad, sick, awesome at managing their inventory and getting it out the door. They have been on a straight run up since, April, where they stopped heading lower, right? So now we've come right back into a buy zone. Today's a perfect day to nibble into Costco. It's perfect. Now, how do you nibble? If you don't trade options, you might say, you know what, I need to give this a day or two. But since I believe most sell-offs are algorithmically driven, I will suggest that probably by the end of the day, this chart is going to give up half of this fade and turn it right back into some sort of buying environment. So maybe 875 or something like that, where it might end the day. But it's a beautiful day to buy Costco, in my mind. Everybody gets scared and they go, oh, what happened? But take a look at this. If you look at the middle of May, everybody that got involved basically said, you know what? If that goes a little bit lower, I'm going to buy it. How do you know that? Because you can look at the chart and there are no candles underneath 850 for more than a day or two. And they just pick it right back up. Right? I mean, absolutely right back up. And so if you see from the recent past that there's all that buying, it's a great opportunity to pick it up.
Yeah. I love those resumption. It gives you a nice little area to kind of have a support area.
Absolutely.
Let's talk about this. Obviously, NVIDIA has been going crazy this year. And obviously, a lot of people like to kind of talk a lot about NVIDIA. is selling off today. In general, as we kind of just look at the chart, how do you think AI is going to affect trading in the next 10 years or so?
Well, AI has been a big part of trading for many years in terms of we have these bots inside of large companies that look for levels of importance and test those levels until they break and then cascade those levels as they break. That's why our sell-offs intraday or our buying intraday have such large volatility measures. But the VIX, which measures 30-day implied volatility, is still very small. And so AI might make us find supports individually a little better. At the end of the day, there are only two things that affect the way a stock runs. It's the overall market sentiment and then the overall sentiment of the stock. And so if hedge fund managers and portfolio managers go, I hate NVIDIA, since that's the majority of the volume, NVIDIA would sell off. But they all sit in this group think. And so we have to just look at the chart and go, well, what's group think here? Well, group think is buy the dip. And that's really what we're looking at with these, where it's got nothing to do with how well AI can be monetized or infiltrated into markets. It's just part of the group think right now that goes, buy it. I know for the fundamental trader that's looking for price to book, price to earnings, cash liquidity, earnings year over year or quarter over quarter, debt to income, all of those things, listen, they matter, but nowhere as much as does Joe Bob over at Fidelity running a portfolio go, I like it, because he's running billions of dollars.
Okay, cool. Do you like jokes?
I love jokes.
Okay, Bill has brought in a dad joke. Do you like dad jokes?
I'm the only person I know in the room that laughs at dad jokes. Okay. So
well, you're in good company. I laugh at my own dad jokes. So he wants to know what falls down and never gets up. And I know what I was thinking is, what if it's a stock that's just been plummeted and it's never recovered? That's why I was trying to think of a ticker that fit that. The actual answer is Anne Marie. Or it's raindrops. What the heck was that? Maverick wants me to announce that if you want to get into the chat, you need to click on the rectangular icon in the bottom right. So there you go. We're new to the room. I can't believe that I was like, because I was going to go, okay, thanks, Anne Marie. You know what I mean? But anyway, I've never seen you fall down, so I don't know if you.
Oh my gosh, I fall down frequently. That's actually a funny joke in my house because I spend a lot of time thinking about things. And sometimes I forget about the physicality of what I'm doing. And so I'm a bit of a tripper, right? And so both my husband and my youngest daughter have been walking with me in really public places. And they've turned around and they've seen me and I've sprawled on the floor, like at the airport. My husband, he just runs. He's very big and his stride is much wider than mine. So I'm always running to catch up with him. And in the last 10 years, I'm like, you go on, buddy, I'll meet you there. And what happens is I'll trip and it'll be hilarious because they'll turn around and they'll go, and they'll feel terrible, but it's just me tripping over my feet. So I'm just one of those,
Me too. I'm naturally clumsy. It's a
yeah,
talent.
I'm very clumsy.
Like I'm particularly clumsy when it comes to carrying big coffee tins around.
Oh my gosh. Yeah, I
I'll be
believe
like,
that.
grab the
Oh,
paper towels.
did you see Maverick's note here? That's so true.
Yeah. Just to announce it, because I don't know if it's in the recording, and it probably won't be in the YouTube when we put it up on YouTube. But Steve, he's referring to Steve Bigelow, used to say that stocks don't move up or down on fundamentals. They move up and down on the perception of the fundamentals.
Yep. Perceived impact on the landscape.
What? Let's see. So we're obviously right now, if I was going to make an argument, like I'd argue that possibly we're in an uptrend. Just
Yeah, I
the
mean,
fact
we
that
are. We're breaking the trend by time and not price.
Yeah. Do you? We're in an election year, and then generally a lot of the common theory is that that's bullish for the markets. Generally, markets go up while they're bullish. Do you feel like we'll continue this trend for the rest of the year? Do you see it kind of changing between now and the end of the year? I mean, obviously, we always let the market tell us what it's going to do. Another thing Steve used to always say.
Yeah.
But right now, do you think the optimism is too great?
Okay, so statistically speaking, when the first half of the year is bullish, the second half of the year is also inclined to be bullish.
Somebody said that study to me. I'll have to look it up. Yeah.
Yeah. And over the last 12 Julys, I believe, the stock market has sort of had an average peak in the month of July.
Okay.
And so the bottom line might be, we probably have a little fade coming. We could see a volatility event that might give us another 5% move, but I believe, an average year, the stock market has 3 or 4 5% rotations to the north. Because the VIX is so low, it means big money is not buying insurance. And if big money is not buying insurance and the little guy is not buying insurance, then it's very likely that every savage dip is going to get bought. So to answer the question in a roundabout way, yes, we're going to have more of the same, but it's going to be a little bit choppy. And algorithmically, we were going to have savage down moves and then savage reversals. Because as we know, in the long run, markets are more likely to go up than go down.
Where would you say that you pull your, like when you started to learn how to trade, who do you think were kind of like the people that mentored you? Where did you learn what you would call your best?
Well, that's a great question. I learned a lot from Brian Shannon. Brian Shannon was one of the first people that brought me into a space where the inner workings of what he was thinking, he was saying, okay, I know you heard that, but let's think about this one more way. And so he brought me to that inside view of what a trader may or may not do during a particular cycle. So I give him a lot of credit. Peter Resnicek of Shadow Trader, also tremendous insight. And then I just have to say, I was so bad at trading when I first started trading, so bad that I finally said, you know what? Why don't you step back, realize that you don't know anything, and just start trying to find little patterns. And that's literally all I did.
Do you think your background as a statistician helped you or hindered you in your trading?
Hindered me, 100%.
Okay, cool.
That and being a mathematician. One, 3-watt bulbs don't become mathematicians in general. So I was a pretty bright kid. And I was used to being one of the smartest people in the room. And there's nothing the market loves better
than to know it all.
Than to kick people they love kicking people in the face like me. The market absolutely loves pounding on somebody that thinks that they know everything. They will get destroyed. And I did. I thought when I came in, I went, okay, it's logical that this happens next. The market is the furthest thing from logical that you could possibly imagine. Imagine the most absolutely frenetic 5-year-old running from place to place because they're excited about X, Y, or Z, and you've got the market. It is not a logical creature.
How many open positions do you have at any given time, do you think?
Oh my goodness. Right now, my sizes of the positions are small, but I really am carrying a lot of positions right now. I'm probably carrying 25, and they're mostly options.
Okay. I have a name. I'm the same way. I probably have about 25, 30, maybe a few more. And they're very small positions, right? But Ken Calhoun had a very specific name for the type of trader we are.
Uh-oh.
Shotgun traders.
Oh, yeah. Yeah. The gun splatter, the shotgun splatter. Well, here's my thing. I love butterflies. And so coming into earnings season with the volatility so low, buying options for outside motion is going to really give us a bang for the buck when a stock actually moves way out of its expected area. Otherwise, it's going to give us a little bit of nothing. I would push back and go, listen, I understand there are a lot of eggs in my basket, but I always know what's going on in that basket. And the moment that I go, wait, what's going on in there? I know. I immediately begin to trim.
How often do you check your positions during
every
a market
day?
Okay.
Yeah.
Is it once a day? Because I usually
several times a day.
Okay. Yeah.
Especially if there's a big move. Yeah.
And the afternoon, right before the
yes.
Cool. Would you consider, how long do you hold a position on average?
Well, usually, and it's because it's in the option space, I will usually hold something for maybe 14 to 20 days. I normally buy it with about 45 to 60 days of premium or time decay. And then most of them are short or leveraged. And yeah, that's what I will do.
All right. Last question. To somebody that's brand new in the market and maybe they just learned what a stock was, what would you suggest is the number one thing that they learn or that they do first?
Okay. You need to open up a notebook and say, why do I want to trade or why do I want to invest? And answer that really honestly. Nobody else is going to get to look in that book but you. A lot of us come to the trading world because we want some sort of glory, because it seems like this amazing place to be. Some of us are way more practical on the other side, and they go, hey, you know what? I didn't really save a lot for retirement, and now that I am here, I want to make some extra money. But you need to map out why you're trading and then map out the absolute risks you are willing to take in that trading event. And in that framework, it's got to be a box of, you can't go outside here. because if you go outside here, you're going to make mistakes and they're going to cost you very much. It's sort of like everybody that ran into the GME trade, and way after the stock started falling, everybody was still pumping the game up because, you know, they were trying to push the stock up so that person could be their exit liquidity. They pump the stock up and then they sell. And so if you could frame out why you want to trade and how you'd like to go about trading, you're not going to get caught up in that meme excitement like, you know, the person that bought GME at, you know, I don't know, $1,600 a share or whatever it went to, some extraordinary number. But yeah, it's bananas. I would say that, and I know you might be going, what kind of a dumb thing is that you're saying for me to do, Anne Marie?
No, I think that's great.
But you really need to figure out your whys first.
Yeah. Yeah. I mean, so many people just run in, right?
And they're just as
fast as they can. And the market's the one place, like if you're starting a new business, right, you can kind of estimate what your costs are and stuff like that. When you're trading, you can go, oh, I'm just going to paper trade.
Exactly.
Right? Oh, okay. Like I'm doing pretty well with my paper trading. Let's just buy a couple shares. Let's see how that goes. Right. But so many people, they just jump in and they put everything in there. I think my advice would be take it slow. Slow down.
Yeah.
The more boring you can make trading, I think the better you'll do.
No, and you know, that's true. Hey, listen, take a look at Warren Buffett and Charlie Munger. They bought when things were really cheap and have sold when everybody gets irrationally exuberant. And they've done it over and over and over and over again. But, you know, what was Charlie? 99 or 159? He was really old. And so it takes a while to build that up. And, you know, we're microwave kids. We don't know what it's like to wait on food. We don't know what it's like to wait on things.
And we're raising the internet generation.
So. Oh, yeah, which is even worse.
The TikTokers.
Yeah.
All right. That's awesome. One more time, Anne-Marie, the best place to get a hold of you is on X, which is the platform formerly known as Twitter. Yes. And you can reach her at, it was Anne-Marie Trades.
Correct.
And she won't ask you for money in a DM. So
yes, exactly.
Okay.
Yes.
All right. Well, I want to say thank you for being here. That was great. I'm surprised it went as good as it was. So it's like our first one. So thank you for being our first guest.
Yeah, I love it.
I'm surprised that, you know, well, everybody's microphone was off that needed to be off today, and it just went well. I appreciate everything. The friendship over the years.
My pleasure.
Thank you. All right. Thanks, everybody. We'll see you again next week. Thanks for coming in. If you're watching this on YouTube, like and subscribe. It helps a great deal, and we appreciate it. Thanks again, Anne-Marie.